Good morning. Welcome to a special Thanksgiving edition of Market Monday. And not only that, but the Soccer World Cup is underway in Qatar. While the World Cup only happens every 4 years, it's been a bit longer for the United States as they failed to qualify for the 2018 tournament in Russia. The United States' first match is on today at 2 p.m. against Wales, with games all the way through the finals on December 18th. Well, as we've been talking about inflation just about every week, do you think we could resist talking turkey? According to the latest American Farm Bureau Federation survey, the average cost of a classic Thanksgiving feast for 10 people is $65.04, which is a $10.74 or 20% increase over last year's $53.31 tab. That is well above the 2020 price tag, which was the cheapest Thanksgiving in a decade, which came in at just $46.90. We can blame record high feed prices, general supply chain disruption, the war in Ukraine, and even a bout of bird flu in some regions. Even with the increased prices at a cost of just $6.50 a person, the Thanksgiving staples are still a bargain. Here's a quick look at the individual prices on the Farm Bureau's Thanksgiving shopping list for 2022. We see the turkey itself up about 21%, but at less than $2 a pound, still quite cheap. Frozen pie crusts, gotta have those. Even though it's up 26%, still not breaking the bank at less than $4. Pumpkin pie mix up 18%. And look at this. Fresh cranberries down 14%. It'll be interesting to see what next year's prices look like as we talk about the year-over-year changes so often in these videos. So even if we have the same higher floor of prices, we could get 0% Thanksgiving inflation. So here we are with an inverted yield curve, crashing LEI's leading economic indicators, as Chad mentioned last week, housing market being brought to its knees, Fed Chair Powell giving no indications of easing rate hikes, many traditional harbingers of recession out there. And here we are sitting around waiting for the eventual recession to happen. Everyone knows the playbook. But because information moves so fast nowadays, did the market already digest this inevitable conclusion? Is everyone waiting for the elusive capitulation we're all expecting that finally signals the bottom? Is that all there is to it? JP Morgan put out some interesting research looking at prior recessions, the Eisenhower recession in the late 50s, the stagflation era of the mid to late 70s, the early 80s double dip recession, and the savings and loan crisis of the early 90s. During each of these episodes, we can see the blue line here, the S&P 500, the stock market, bottoms before GDP recovers, before earnings recover, before payrolls recover. But not so fast, Matt. 50s and 70s is ancient history. They didn't even have the internet back then. Fair enough. So let's look at the GFC, global financial crisis of 2008 and 2009. Here we see the stock market bottom first. And for good measure, same with COVID in 2020. But is it that easy? Of course not. Look at the dot-com bubble crash of 2000 to 2002, where there was only a very slight economic recession, but the stock market took a really long time to bottom, much longer than the economy itself. I think the conclusion is the stock market tends to bottom first more often than not. So the next time you hear somebody say the stock market is a forward-looking indicator, this is what they mean. Let's stay here for just another minute. Another headline you may come across is that the market has never bottomed before an official recession begins, which is true. But the market does often bottom before an official recession is announced. Remember, the NBER, the official arbiter of recessions in the US, identifies recessions in the rearview mirror. Remember COVID? It wasn't until July of 2021 that they announced the recession for February to April of 2020, over a year later. So there's always a lag, and sometimes a long one, between the actual lived recession and the official announcement. So here we're looking at the S&P 500 stock market since 1980, blue portion showing the actual lived recession, and the red dots, the recession announcement. So we can see, again, more often than not, the stock market bottoms before the official NBER announcement. It was only the mid-'80s double dip recession and the GFC, global financial crisis in 2008, where we saw the market continue lower after the NBER announcement. Again, forward-looking market. All that said, it seems 2022 continues to deliver surprise after surprise, as we just had a rare November hurricane in Florida a couple weeks ago. But in the midst of all this inflation and recession, uncertainty with the Fed, let's not forget to remember the things we can be grateful for, whether it's health, wealth, family, or friends. From all of us at Collaborative Wealth, we wish you a very happy Thanksgiving.